All right, everybody, welcome back to the More Doors podcast. Today is episode 32, and I am here with my very esteemed co-host, Brian Force. What's up, Brian?
What's up, buddy? Rocking and rolling.
Rocking and rolling.
I wore this shirt for you, especially today, because this is the shirt that we always tell the story about when we talk about
I think you've worn it before.
This is the one that I sewed the cuff back on upside down.
Nice.
So this is supposed to face the
So
other
not
way.
only did Brian take creative writing but can't spell, but Brian took sewing and sews things upside down.
Yep.
Nice. Cool. Awesome. Well, we're very, very excited about today's episode. We have a very successful attorney turned real estate investor that's going to join us right after this. Okay, welcome back to the show, everybody. Again, fantastic guest today. Very excited to have him tell his story. But before we get into storytelling and fantastic interviews with guests, we are going to give our show sponsors a big head nod today. First and foremost, to our friends, the loyal ones, Deep Blue Capital.
All right.
Go check us out at deepbluere.com. Can't believe it's been well over almost a year now, coming up on our student housing acquisition and fantastic partnership. And word on the street is we're getting back to work on capital raising and putting another fantastic opportunity together for our investors.
Got something cooking. Details to come in the coming days. But
yes. Go to deepbluere.com, subscribe to the newsletter, get on our calendars. We want to know about you, your financial goals, and how we can help get there. Also want to give an enormous shout out to the man, the myth, the legend, Jesse Showalter at Tor Studios. Go to torestudios.com. I mean, the beard continues to be unbelievable, and it really has. It's kind of its own identity and credit cards and the whole thing. That thing have a social security number, Jesse?
It does, and it's got a better credit rating than I do. So,
oh, cool. I knew it. But seriously, go check out torestudios.com. Jesse does an amazing job on our show, as well as a number of other shows, and he's going to hook you up too. Tell him he's got the best beard ever. Flattery wins discounts, and he's going to take really good care of you. So what's up, B-Money?
Oh, man. I'm excited to get back to work. I'm excited to be here. I'm excited for spring. I'm excited for deal flow. I'm excited for where the business is heading. It's a lot of good. I just feel like a lot of good energy. It's not just because I'm hopped up on Red Bull.
So you are like technically super excited.
Yes.
Like the TV show.
Legit.
Like that guy.
The
Uber show.
Stories.
Yeah. I love it. Cool. All right. So let's introduce our guest. Today's guest. You want to do it?
Let's do it. Today's guest. Actually, you know what? I'm going to bring Gib on. So Gib Irons, incredible attorney, turned real estate investor. We never like to do people's backgrounds for them because people always tell their own stories best. But as part 2 of that today, I wanted to bring Gib up because I just love listening to him talk in like the best quality sound studio that we've ever had for a guest. He looks amazing. His microphones are way better than ours. And so I really just want to have Gib just give us some love here. Welcome to the show, brother. How are you? We appreciate you being on, man. Thank you for taking the time.
Yeah, no, thanks for having me, Matt, Brian. It's a pleasure.
Absolutely.
Good to be here.
Absolutely. So we've got a lot to talk about. We'd love to dive in, and we've spoken several times now, and I think we could go on for hours. So before we dive in, give our listeners just a little bit about your backstory, you and how you got started in investing. Just tell us the whole story.
Okay. All right. Yeah. So my name's Gib Irons. I'm from Eastern North Carolina. I have been a trial attorney for 17 years. And I started out doing real estate law. I always had an affinity towards real estate. But after that, I transitioned into family law. Now my firm has grown. I've got 3 office locations. I've got locations in Greenville, New Bern, and Morehead City, North Carolina. And I have 5 attorneys in my office and 10 support staff members. And so now we do personal injury, family law, real estate was a thing of the past for me as an attorney. But I was doing really well in my job doing trial work, and had a couple of good years where we made good money, and I was just getting completely demolished with taxes. And so I was getting very frustrated with the fact that we just work so hard to make a decent living for ourselves and to provide for our family. And I was giving so much of my money away in tax. And my real estate journey kind of started in a cool way. I'll tell you a little bit about that. But back in 2019, I fished in a tournament called the Big Rock Blue Marlin Tournament.
Yes.
And
You guys are
yeah,
big spirits over here. You just brought up fishing, Gib. Buckle up.
I love to fish. I'm an offshore fisherman. I'm a very, very serious, avid fisherman. And I just have a lot of fun with it. And we fished in a big tournament, Big Rock Blue Marlin tournament out of Morehead City. I was on a boat with a bunch of guys. And if anybody has ever been blue marlin fishing before, they know that, blue marlin fishing's kind of hit or miss. Sometimes, it's really hot and you could hook up 2 or 3 times in a day. Sometimes it's really slow and you might not have a bite for multiple days consecutively. So we're fishing in this tournament. You fish 4 days out of a 6-day window, and we do not catch anything during the tournament. Like the last 2 days, the ocean is slick glass calm, and we're pulling lines through the water. We don't get any bites at all. And so I really got to know these guys on the boat. And one of the guys was a real estate investor, and he had accumulated 200 properties in a pretty short period of time. And he told me about his methodology. What he had done was he was buying these little single family condos for like $10,000 or $15,000 down. He was fixing them up with, using the Burr method, and he would rehab the properties and increase rents. And then he was holding them, and he'd accumulated 200 properties. And the guy was a very intelligent guy, but he didn't have a lot of education. He was a blue collar guy, high school degree, no college. And he told me, he said, Gib, if I can do it, you can do it too. And like I mentioned before in the intro, I have always loved real estate. And so I got off of that boat after that fishing tournament a different person. And I went out on a buying spree, and I bought 14 single family properties in 14 months.
Wow.
Yeah. Yeah. So it was an exciting time for me. I closed on all 14 of those properties. I fixed them up. I had them tenant occupied. I had, 100% occupancy, no vacancy, and I had these beautiful little condo units that I had bought. Most of them I had paid about $75,000 for, and then I'd put about $25,000 into them to fix them up and jacked up rents. And so I was having fun with that. Next, I tried short-term rentals, and I bought a short-term rental property in the Great Smoky Mountains. It's in a little town called Sevierville, which is just outside of Pigeon Forge and Gatlinburg.
Okay.
And that property has done really well. It's cash flowed really good. I enjoyed that, but I started hearing about multifamily about 2 years ago, and I got into multifamily, started going to a bunch of real estate conferences, and learned underwriting, took some coaching courses, and just really was absorbing I listened to every podcast I could find. I bought every book that I could get my hands on, and I read it, and I was just constantly immersed in multifamily real estate. And I just really got the bug, and just kept running with it. And so I've done a bunch of LP investments, and I became a general partner and started raising capital for deals, working with other operators about a year ago. And I've done two raises now with a group called 10Y, or 10 years to retirement. And so it's just been a great journey. I've saved myself, we can talk about this in more detail, but I've saved myself hundreds of thousands of dollars in tax. My wife is the real estate professional of our family, And so she manages our 14 condos and our we've also got a commercial property here in North Carolina. So that's kind of how we've done things, and it has just been a total game changer for me. I love real estate, and it's been very reinvigorating to do something different, a little bit different than my trial work.
Nice. So there's so much to unpack there, Gib. So much to unpack. But your story is actually very, very similar to mine. So I moved from New York to Texas, call it 10 years ago. And prior to moving, I'd been doing an annual overnight tuna trip on one of the biggest sport fishing yachts in North New Jersey. And, one of the guys on the trip was a single family house investor in Eastern Long Island, and he owned 50 houses. And on a fishing trip, I grabbed a 6-pack and I sat down next to him, and I started asking him a bunch of questions. And the first one was, "Do you want a beer?" And he said, "I don't drink." So I did the only thing I knew I could do, and I drank the whole 6-pack and asked him a bunch of questions. But like to your point, right? I got off the boat a different person, and he introduced me to people in his network, and that's how I bought my first property back in 2016, and just kind of scaled up from there. So it's very eerily similar, and very important. You mentioned Morehead City. How far is Morehead City from Wanchese or Wanchese?
Wanchese.
Wanchese.
So Wanchese is in the it's on the Outer Banks, and Morehead City is in the southern Outer Banks. So as the crow flies, it's not very far from Wanchese to Morehead City, but actually driving it would take you like 3 or 4 hours, because you'd have to drive back to the mainland and then down and back over to the Outer Banks.
Okay. So I have friends, the same guys I fished with up in New Jersey. They are fishing out of Wanchese as we speak for giant tuna. And I was watching. So now we got to go to we got to go to Wanchese.
Okay.
Right. In the wintertime, we're going to grab Gib. We're going to go catch ourselves a giant tuna.
Deal.
And Gib's going to figure out how to get us a tax write-off on doing the whole thing.
Fair enough. It's settled.
Done.
Hey, I would love to. Let's
do it. It's a bucket
down.
list fishing trip for me. So they're snapping their heads off literally as we speak. I was following Mark on Facebook earlier today. All right, so fishing out of the way, super important. Definitely some action items, right? We're going to jot that down. All right, so law firm, 3 offices, 5 lawyers, 10 support staff. You started to, you went on the fishing trip. You talked to a guy. He put you on. You bought 14 properties in 14 months. You still have all of them?
I still have every single one of them.
Nice.
I sure do.
Nice. Now, just curious, do you fall into the don't sell unless you have to bucket, or has it just been not a reason for you to sell?
So I would say that it's kind of half and half. I have been aggressively acquiring as many properties as possible, because we've had, good years recently with the law firm. And so I've needed as much depreciation as I could get. And I didn't want to trigger any kind of depreciation recapture, by selling too early. So it's really more about the depreciation. But I will tell you that those condos that I acquired for $75,000 and put about $25,000 of CapEx in them, I could sell most all of those units for about $175 right now.
Nice.
So it'd be a great time to sell, but quite frankly, I do want to hold those. I think, it gives my wife, something to manage, for her real estate professional status. I think it's good that she's got those 14 condos. And so, and plus the depreciation recapture is something that I already pay enough in tax. I'm trying to either substantially reduce or eliminate tax every year.
Got it. So for those on the show that have not heard the term depreciation recapture, can you give us a 60-second class on it?
Yeah. So, I'm not an accountant or a CPA, obviously, but my CPA has informed me that, what we're doing is we're doing a cost segregation study on these properties. And instead of taking straight line depreciation, which, is different for residential properties than it is for commercial properties. But let's say that, if you were to straight line depreciate a piece of property and it was like 27 and a half years, you can do something called a cost segregation study where you hire an engineer to basically categorize each of the different parts of the property. Like part of it is land, part of it is the building, part of it is fixtures, part of it is, kitchen cabinets. And they get down into the nitty gritty in terms of categorizing the entire value of the property into these small subcategories. And then you can take accelerated depreciation on certain categories under the tax code. So when you take that accelerated depreciation, meaning you take all of the depreciation on certain parts of the property in the first year, in the year that the asset was placed in service, if you sell the property too soon, something called depreciation recapture kicks in, where you would have to pay, you would basically have this phantom income coming back to you on your tax return that would trigger a tax consequence where you would have a taxable event.
Got it. Awesome. Thanks for that.
Yeah. Yeah.
Okay. So I love how you kind of transitioned into multifamily, but there was a time between when you were, you're still a lawyer, right? But when you had the law firm,
Sure.
and then now you're starting to raise money, but in between, you invested in a bunch of LP opportunities, right? Aside from your single family condos.
I did.
So just curious, like I have my own opinion on being an LP first before a GP versus just kind of jumping right into the deep end of the pool on the GP side. Why was that the natural path for you? And what'd you learn from it?
Well, for me, I knew I had a good network of people that I could raise capital from, Matt. But what I wanted to do was I wanted to really, learn underwriting, learn how to vet a deal sponsor, learn what I liked and did not like about the way certain operators function. And I did not feel comfortable going to friends and family and raising capital from them until I fully understood, the mechanics of how this works. And so for me, it was very easy to become an LP. I've always had a pretty high risk tolerance, right? Like I know everybody's got a different risk tolerance, and some people are very conservative and risk adverse. I've always been more on the aggressive side, but in particularly, when I'm betting on myself. Now, in these kind of deals as an LP, you really have no control over the deal, right? So, I was more relying on the operator to perform. And so I wanted to go through that process of seeing, some people that I hoped were world-class operators and see how they did it. And I've had some mixed experiences with those LP investments that we can talk about as well. But I wanted to see how things worked before I raised a dollar from friends and family. And so for me to put $100K into a deal or 250 or 500 or whatever the case may be, I was perfectly comfortable with that risk. But I get very clammy when I start thinking about, passing that risk on to friends and family that are, trusting me. So it was part of my growth process to get some experience before, tackling a capital raise on my own.
Yeah. Well, and that I think is a great dovetail, Gib, because from my personal experience, I took the same route. I was an LP on, I think, 4 deals before I ever did my first GP deal. And what it taught me was the interaction with the sponsor. I learned so much from the investments that I'd made about the kind of GP and the kind of sponsor that I wanted to be when I was on that side, as far as communication goes, as far as investor relations and things like that, and the experience that I wanted to give my partners. And it was especially a time where it was good to learn those lessons because we were right in the middle of the COVID boom, kind of volatility roller coaster, and every sponsor that I was invested with really handled those things differently. So it was very eye opening. So my question is, how how did that influence you, the different experiences that you've had with deal sponsors before you actually became a capital raiser? What did you learn from the different ways that different sponsors handled communication, asset management? What did you learn and get influence from that you carried over now as a sponsor?
Yeah, Brian. I mean, so I've learned quite a bit, and I've invested with 4 different operators. And so, some of the operators give very high level reports, meaning that they send you a pretty bare bones email, either monthly or quarterly, whatever the frequency may be. And it gives you a little bit of detail about the economics. It tells you things like occupancy, rent growth, how many units have been turned over during our CapEx renovation process, that kind of thing. Some other operators give you a ton of detail, give you all the financials, give you, graphs and illustratives that will explain the numbers. And some of the operators are, and I prefer the more detailed reports, right? And some of the operators are accessible by telephone and email, and other operators, once they have your money, are much more difficult to get a hold of than they were during the time period where you were.
Crazy, right?
Yeah. I guess it's basic human nature, right? Like, you want somebody to invest in your project, and your communication level is a 10 out of 10. And then once you've got their money, I mean, I've had some operators that did not have very good communication after the project closed, and that's just very unsettling for the investors. Like, let's be honest. If you don't hear from the operator regularly, you are going to assume the worst. And that's just the way people are, right? Like, if I try to call you 10 times and you don't answer my call, I'm going to think, Matt, Brian, what's up with those guys? Like, they must not like me anymore, whatever the case may be. Like, it's going to cause me concern if I can't get a hold of you. And, same thing goes for our investors, right? And so it is a relationship business. And like you said, Brian, I wanted to give my investors a white glove service. And in order to do that, I had to know what a white glove service looked like. And so, working with those 4 different operators, I've got 4 totally different experiences. And some of the deals have performed well. Some of the deals have not really performed that well. I haven't had any of them that have been catastrophic, an emergency type situation, but I've had some that I've been invested in for over a year that haven't paid a distribution yet. And, hopefully it'll correct itself. But yeah, I think, you can never communicate too much with the investors. And tell the investors the bad news. It's crazy to me that some operators want to hide all the bad news. Like, to me, I appreciate the realism of, hey, we've run into a snag. We had a chiller unit that blew up, and it burned, down a couple of our units. Something like that, can happen. And if you come forward and tell the investors about it and they understand it, that almost gives them more confidence, because they realize that you had a problem and you overcame it and you handled it professionally and expeditiously. And to me, that's comforting. Even though it's bad news, it's comforting to get that kind of feedback.
Yeah, I love that.
I mean, and you hit the nail on the head. We talk about this all the time too. We've been in very similar situations with, some deals going well, some deals not going well. And I've shared this premise before. I'm in a couple of deals right now that, again, distributions have been paused and not going great. Couldn't really predict it. A lot of what the interest rate environment and COVID and everything really did to some deals. And so the operators that I've invested with that are highly communicative, that tell us the good, bad, and the ugly, even though distributions have been paused in those deals, I understand, because I'm a seasoned investor, and I would absolutely invest in those deals or with those operators again.
Sure.
You know, and I've got operators that maybe the deal is doing better than the deals that the operators are being more communicative, but I wouldn't know. And I probably won't invest with those sponsors again, simply because their communication is so poor. And I think that is such a good action item for sponsors and GPs listening, as like in a environment, in a society where information moves very quickly, that white glove service, all it really takes is open and consistent communication. If you can do that for your investors, you're gonna generate a lot of good relationships and a lot of loyalty from your partners.
Yeah, and I agree with that 100%. I also think that if you have the confidence, nerve, balls, whatever, to call somebody up and ask for money, right, and walk them through the subscription agreement, so on and so forth, just from a morality and business ethics perspective, like, you should be able to pick up the phone and always give the update, right? And I think this was one of the things that we talked about in one of our first episodes, right? Good, bad, or indifferent, right? We will always tell you what's up.
Yep.
Right. And you know, when it comes to bad news, kill the dragon when it's small, get it out there.
Yep.
Right. Make sure that the feedback is balanced, because even when you're doing great, there's always opportunities to do better.
Yep.
Right. Always. And you got to never take the foot off the gas. I mean, one of the things that, you know, me, you, and Nick are literally living through in real time is, you know, you put a business plan together for a deal, you set 5-year targets. That doesn't mean you close your eyes for 5 years and wait for everything to come together, right?
No.
Sometimes you got to make changes. Sometimes you need to make adjustments. Sometimes you need to go renegotiate contracts, right? All in the name of NOI and investor satisfaction, right? And I think that's the difference between, you know, a proactive operator that's going to be, you know, consistently delivering returns, maybe not always overachieving, but be consistent, versus those that kind of do a one and done transaction with and you never hear from them again.
Yeah, exactly. Couldn't agree more. And so, Gib, this is kind of unique to your strategy now. We spoke about this before. You're actually have moved us a little bit you've moved into a little bit into the build to rent space now with some of what
Yes.
you're doing. So what attracted you to that model, and you know, what are kind of the unique like attributes of that type of investing that you think are different than kind of straight up, you know, multifamily value add investing?
Yeah. So, Brian, that's a great question. You know, Brandon Turner did a little piece on this recently, which I thought was interesting. You know, the Bigger Pockets, Brandon Turner. But, you know, when you build a property and you convert raw land into a building, there is a higher delta. So you are going to be able to potentially make more money with build to rent, it has been my experience, than you can with a traditional value add. At least there's a higher delta. And so, you know, there are things that could adversely affect the returns, but you've got a thicker margin there, and you're able to better sustain those things. You know, what really attracted me to it, though, was I have a friend and a business partner named Derek Peterson, and Derek owns a company called Adapt Media, and he builds out websites for capital raisers. And so he had created my website and helped me with my brand for Irons Equity. But he told me about an investment opportunity called 10Y, and it was 10 years to retirement. And the methodology was created by a guy named Bala Krishnan, who is a Silicon Valley tech entrepreneur. And Bala has a very interesting story in that he created a startup, a tech startup out in Silicon Valley, living out there. And his startup, Peel Technologies, had created this app for Android phones. And I won't go into all of the background about it, but Bala had built this really amazing company, a startup, and he'd raised $96 million from venture capitalists. And he then exited his company in 2021 at a $550 million market cap. So he made a tremendous amount of money for all of his investors and returned these very nice profits. And his wife is a mathematician. So during the time that they were running Peel Technologies, they were also investing their personal funds in multifamily real estate, and they were doing some build to rent and some value add. They really did a little bit of everything in the multifamily space. But Bala and his wife invented this methodology where what they wanted to do was they wanted to create a fund that would, do all build to rent in the Phoenix market. And the whole point of the fund was you would take these fully entitled properties and you would transfer them into the fund after they were fully entitled and had all the zoning and fully de-risked from an investor perspective. And then you would build these beautiful townhouse communities, Class A properties, just really beautiful stuff that, has the very nicest finishes. These are like all 3-bedroom, 2.5 bath, two car garage townhouses. And the first one that we did was 190 units. And since then we've created this fund, and it's a $30 million fund. And within the fund, we're, building 3 townhouse communities contemporaneously in the first deal cycle. And one of the things that's so unique about the fund is that rather than paying out cash flow, which, cash flow is great, but if I invest $100,000 in a real estate investment and I get 5% cash on cash, that's $5,000 per year. If you divide that by 12, if I get monthly distributions, that's $416.67. And that's really not going to move the needle for me in my life, especially for like a high income earner. $416 a month is not going to move the needle for me. So Bala's whole methodology was, let's reinvest the profits and create this compounding effect inside of a fund so that we can double our money with every project and then just roll it into the next project without having any kind of a tax. And it's complicated. I won't get into all the nuances, but inside a fund, you can use a strategy called depreciation staggering. And depreciation staggering is when you have multiple assets inside of a fund, you can sell one of the assets and hold the others. Like in this instance, we're doing 3 properties contemporaneously. We will dispose of one asset and hold the other 2. And we will be able to get enough depreciation off of the other 2 to totally eliminate any capital gains on the asset that we sell, which then allows our money to grow tax-free throughout the entire life cycle of the fund. So that's kind of the abbreviated version of how I got into it. But I loved the thought process of having an investment that wasn't so focused on one specific deal, but more so focused on a destination. And the destination is taking you to retirement in 10 years. So
good.
Yeah.
So good.
Yeah.
So Gib, give us a little bit more detail
Sure.
about the project that you're working on. So your 3 assets, you're building them contemporaneously. Like, how many doors is that? What does the budget look like? How long is the build time? And frankly, if you don't before that, like, why
Sure.
build to rent? What's so appealing about build to rent versus traditional multifamily? And is there anything different, nuance about that market or demographic?
Well, in Phoenix, they have, Matt, the supply and demand curve in Phoenix has been really inverted in that the supply is unable to keep up with the demand. In Phoenix, we've experienced massive population growth and massive job growth. And so there's just not enough places for people to live. And so we're building these properties because there's not enough inventory out there for people to find a home. And so that's part of the attraction. But to me, I think another part of the attraction is, this fund is going to be in a perpetual state of construction. And so it is a heavy lift. And it's more work than it would be if we were just going to build a property in 3 years and then hold it for 7 years to live off of the cash flow. But the reason we're taking on this endeavor and, you know, a much more difficult assignment than it otherwise would be is because what we found was when you convert raw land into a building, it's easy to create a 2x equity multiple for the investors. And once you create that 2x equity multiple, you know, then most operators will hold the property for an additional 7 years and enjoy the cash flow. So it's like a 10-year hold total, right? Between the building time and the hold period afterward. And so, you know, we wanted to go ahead and capture that 2x equity multiple and sell the properties immediately. So we do not intend to hold these properties for long periods of time. We intend to build them in 24 to 30 months. You know, maybe 36 months if we run into some delays, and then we will sell them as soon as we can prove proof of rents. And once we capture that 2x equity multiple, we're going to move on to the next one and do it again and again and again. And so I could show you if I had the graph with me, but that 2x equity multiple is like the big part of the curve, and then it just kind of flattens out when you're living off the cash flow. And so we want to capture that really aggressive growth in the very beginning with that aggressive growth curve, and then sell rather than holding onto it as it begins to flatten out.
I like it.
Yeah, that makes
2x,
yeah, I
2x fast,
yes,
and then it trails off. I like that.
100%. I mean, we can go down that rabbit hole all day long. I really love that ideology and that
Yeah.
philosophy.
So, Gib, you're in North Carolina. These projects are in Phoenix. How do you orchestrate that?
Yeah, so I'm flying out to Phoenix on Wednesday of next week, and it'll be my 4th trip out to
Nice.
Phoenix in the past in less than a year. So I go out there but pretty much quarterly. Bala Krishnan, the operator and the lead sponsor of the deal, he lives in Phoenix. He moved to Phoenix after he sold that tech company. And you know, he signed a non-compete, which doesn't allow him to work in tech anymore. So he moved to Phoenix, seeing how much growth there was out there. So he's our boots on the ground, and then he's built a group of you know, very, very seasoned build to rent members of our team members that are helping us. So we have like a managing partner that's done, I think she's done 4,500 BTR units in Phoenix, in the Phoenix market. And she's done something like 7,800 single family residences in Phoenix. So she's got a tremendous amount of construction experience.
Wow.
And then we hired 2 people to oversee the contractor. So our contractor is a true partner with us. This is kind of cool. I don't know if you've ever done this before or heard of it, but we ask our general contractor to invest alongside us. And so the general partner, or the general contractor rather, made a 7-figure investment in our fund, which makes him a true partner. And so, you know, when you're doing BTR, the biggest risk is that the contractor doesn't perform. And so to eliminate that risk or hedge against that risk, we ask him to invest with us, which he did. And then we hired 2 people that are very experienced contractors to oversee the contractor. So we have built out a team. I think there's about 10 people total on the 10Y team, and they're all located in Phoenix.
Wow. And just curious, how big are these projects from a financial perspective?
Yeah. So, you know, the equity, the $30 million is going to be fully deployed between the 3 first properties. The properties in the first deal cycle, there are 3 of them. And I think it was like, I can't remember the exact allocations of how the 30 million is divvied up, but there is one property that is going to take about half of the equity. And then there are 2 other properties that are going to split the other half. And these are smaller townhouse communities, like 55 units. One of them is 55. One is like 100. You know, the first one we did out there was 190 units. And these are a little bit smaller, but we're going to deploy the entire $30 million in equity that we have raised into this project and into this first deal cycle. And if we're able to create that doubling effect, and again, some of the projections require perfect execution. And so nothing's ever perfect in this life, right? But if we are able to double the equity for the limited partners on every deal cycle, and we do 5 deal cycles, then that 30 million would be, 2 to the power of 5 is 32x, and 30 million times 32 is 960 million. So we're talking about a fund that could potentially hold, $1 billion of equity at the end of the fund when it comes to an end. And of course, if we have $1 billion of equity, we're probably going to have, $5 billion of assets under management. So it's a huge lift. And I'm glad that Bala is in charge of hiring everybody, because he really knows how to put together a team, and he did that at Peel, and that's right up his alley. So I just think he's a great operator to be at the helm of the investment, because there are so many moving parts, and a lot of it is managing the managers. So I'm glad Bala's taking care of that, and instead of me. It's a huge lift.
Wow.
Big project. That's awesome.
$1 billion in equity.
Yeah.
Billion with a B. I love that.
Well, and I think, and so I want to, kind of drill down just on this a little bit. I mean, Gib, obviously you're a successful entrepreneur. You've built a very impressive business, impressive law firm. The way that you're speaking about these projects, right? If people didn't know that you were really only, a few years into your sponsor journey, a GP journey, and even LP journey, it would feel like you're a career long real estate investor. And I just think it's something to be spoken to about, once you learn the fundamentals of this business and you build the right relationships and you figure out what value you can bring, and you partner with the right people who are experts in what they do, you can scale and do it in a responsible way that still provides incredible returns for people and a lot of opportunity. But I think that inability to build a partnership with people that complement your strengths, that's what holds a lot of people back. And so if we're to drill down to some tactical guidance and tactical advice, and we're talking to other successful maybe entrepreneurs who want to get into the real estate investing space, what advice would you give them on sort of building that team, building those relationships so that you can scale without having to learn and do everything on your own?
Yeah, no, that's a great question. When I first started hearing about multifamily, and I went to a couple of conferences, I went to several conferences for over the past 2 years. I've been to, over a dozen real estate conferences. And one thing that they kept saying at all the conferences was, this is a team sport. And to be honest with you, Brian, I was a little turned off by that. I'm not trying to sound like I'm not a team player, because I am. I mean, I grew up playing sports, and I think, that's a great thing as a kid, to teach you how to be a team player. I think sports is a big needle mover for me. But in my adult life, I own my law firm. I make all the decisions. Of course, I look at it as if I work for everybody else. The way I treat them is like I work for you. So I come to them and say, hey, what can I do to help you be better at your job? What, if you're not succeeding, what can I do to give you a better chance of being successful? And so as a manager of the law firm, I see myself as, working for all the people that work there. Like, I'm not too good to take out the trash. I'm not, I would never ask anybody there to do anything that I wouldn't do myself. And so, but I have total control over a lot of the decisions at the law firm in terms of, whether we hire or fire, or, do advertising or don't do advertising, or, where we put our dollars or where we don't. And so I really like that autonomy, to be honest with you. And but that's not the way it works in multifamily. And like you talked about, my thought process is that yes, you can scale so much bigger and so much faster if you figure out what you do well. And for me, being an attorney, I didn't really see that brought any intrinsic value to what they were doing at first. But, there is a lot of legal issues that have to be tackled when you're setting up whether you're doing a syndication or and you're like a lead sponsor of a syndication, or you're a fund manager, that you've got PPMs and subscription agreements and investor relations, and you've got bad actor disqualification forms that need to be signed by all your co-GPs, or if you're doing a fund of funds model, you've got a bunch of technicalities, a lot of things, a lot of legal nuances that have to be done correctly. And so I realized, my strength was in communication and understanding the law and my attention to detail. Look, I sit behind my computer. If I'm not in trial, actually trying a case, then I'm probably sitting behind my computer, 15, 16 hours a day. And so my level of like accessibility and my speed of response is really, it's hard to beat me in an email game. If you want to see who can respond fastest to an email, and it's, there's a group of us on there. If you're the kind of guy that's out and about doing things and you're not behind your computer, you're never going to be able to, to keep up with me, because I'm going to fire back immediately. And so I think you hit the nail on the head, though. You find your strengths, and you go into it with the thought process of like, even if I'm not making a lot of money on this deal, I'm going to take as much responsibility as I can, and I'm going to learn. And so one thing I've done with the 10Y Rise Fund is I told Bala, the lead sponsor, I said, look, I'll handle anything that you and Derek can't handle. Any kind of overflow, I don't care what it is, I'll do it. And what that resulted in was me becoming the liaison between Bala and the attorneys. And he trusted me more than he trusted them. So because I'm his partner. And so, I grew into that position, and I didn't expect any kind of compensation for it, but it gave me access to all the legal documents related to the entire thing. So I know who has raised how much money. I know, all these intimate details of the deal that I have learned so much from it that I can take on to the next partnership. So I think you're right. You pick what you're good at, and you offer that, and you offer to do it with really no expectation of compensation, and somehow you end up getting preferable terms, right? People see the extra work that you're doing, and they want to compensate you for it, but I've never really had to ask for it. It's been more of like a let me volunteer to take this on, and if I have more responsibilities, I'm going to learn a lot more.
Yeah. I love that. And so two things, kind of two of my takeaways about what you just said, Gib, is, really adding value, right? I think the term adding value has become almost cliche at this point. Like everybody's using it and nobody really knows what it means, right? You're really adding value. You stepped in and you leveraged, my second point, your transferable skills based on what you've become successful with into a new venture. And I think there's a lot to be said for that, right? If you're a construction person, right? Carpenter, tile person, contractor, whatever, and you go into the multifamily business, you have skills that you can bring into that business that will ultimately add value. You can do things faster, cheaper, right? More reliably than other people that if you were to open the phone book, right? And there's a whole encyclopedia worth of examples I can use, but the legalities around raising money and SEC filings and 506B and 506C and fund requirements and all that stuff, it's not for the faint of heart. And bottom line, like as deal sponsors, right? It's our job to know that those laws and those legalities back to front.
Yep.
And quite frankly, as LPs, we as deal sponsors need to be looking out for them
Yep,
also, right?
exactly.
And making sure that the agreements are above board and they are, protecting the LPs and making sure that their distributions are in line and their protections are in line, so on and so forth. So I love how you stepped in, built the network, found someone who clearly has a great vision on executing compound growth strategies, and you literally stepped in and put the kind of the chief legal officer hat on, if you will, and didn't expect anything for it, just to kind of go along for the ride and learn and invest your own money and try and make money for your investors. I love that.
Yeah,
100%.
it's been a blast. It's been a great journey, and I think that's right. Like, adding value has become pretty cliche, and one thing Alex Hormozy was talking about is, a lot of people ask him, what can I do to bring value to you? And then that requires you, to think about what can this person do to add value to me. And so I think, and Hormozy hit the nail on the head. Really what you do is you just say like, hey, I can do anything that you guys need that's rollover. Like, let me tackle it. And so, through that, Bala put me in a position where I was able to assist with managing all of the co-GPs. And I was able to build relationships with them, have them sign all the bad actor, forms, saying that they're not disqualified from participating in a 506 offering, and able to meet them and build, long lasting relationships that will, a lot of those same capital raisers have already expressed interest in working with Derek and I on our next project. So we might be able to go to the next project instead of just having, Derek and I raising capital. We would potentially have an entire team that we could bring in to take down, a larger raise.
Amazing. Given the fact that I think this is, you said your second raise or second deal you're raising money on.
Yeah.
What did you have any limiting beliefs going into it, or did you think it was going to be more difficult than it actually was? Walk us through that, because I think there's a lot of people out there that are terrified about, actually, they romance about getting the deal and then they get it and they're like, I don't know how to ask for money.
Yeah, I mean, I had a ton of limiting beliefs. One of the things was, deciding for other people whether or not they were interested in my deal. I had a neighbor down at the beach that I did not approach because I just did not think that he would be interested. And, my wife and children live down at our beach house through the summer, and they have a beautiful life where they live down there for 3 months and get tan and spend time either at the beach or the pool every day. And she called me one day and said, one of our neighbors came over and said, I would invest in Gib's deal, but he never asked me.
Oh,
And,
wow.
yeah, this is like in the 11th hour of the deal. We were like closing it down. And so I reached out to him and I called him, and he immediately came in with a pretty good size investment, which, just goes to show you, like, don't ever write anybody off. Ask them about it, talk to them about it, tell them you're happy to talk further. I think that's probably the biggest limiting belief, is that, like, either that person doesn't like me, or they're not going to, I can never persuade them to invest, or they may not be interested. I think every time you do that, you make that decision for somebody else, it's a limiting belief. And really, you don't really know who's going to be up for investing with you. And another thing that I think is super important is learning how to deal with rejection, because I love getting a no. Please tell me no, that you're not interested in my deal. That tells me, number one, that I've done my job and I can go on to the next investor that I'm trying to recruit. But also, it is like, you have to get a certain number of no's before you're going to get a yes. And so the more no's I get, the closer I get to a yes. And I remember on my first raise, I called 60 potential investors, and I got 56 no's.
Wow.
56 people told me no. And like I was pretty annoying, you know, in that I kept calling them until they told me no. You know, a lot of people try to avoid you. They couldn't avoid me. And so I called all 60 of those people until 56 people told me no. 4 people told me yes. I raised over $1 million from that small group of people and was able to move on to the next project. And then a lot of the people that said no for the first project said yes for the second one. So,
Right.
you know, keep asking.
Yep. I love that. And
Yeah.
it's so funny how those ratios work out with the 60 to $1 million. We've I don't know where we've talked about that before, but it feels like that is some sort of weird magic
Absolutely.
number.
Absolutely. And what you just said, Gib, I think is really important for folks that get a deal across the finish line, right? There's asking people for money is one thing. Having money at the ready is a whole nother thing. And just because you get a no doesn't mean it's a no. It's probably just a not now, right?
Right.
We've been in a tough economy. Some people have lost their jobs. Lots of people lost their jobs, right? And some people are just skittish and being super conservative and
Watching the news too
fattening
much.
fattening the piggy bank, watching the news too much, right? But if you never call those people back, like shame on you, because actually the impression that you're leaving is like, okay, I said no to this person and I never heard from them again.
Right.
Right?
Yes.
Talk about one-sided.
That's actually a really good point, because you hit the nail on the head. It's not a no. It's a not right now or not this deal or whatever. And human emotions go both ways. Those people that said no on that deal actually will be really offended if you never call them back. We get in our own feelings about it, like it's
Right.
a no forever, but you alienate people that could be lifelong partners on different deals.
Yeah. And I think too, it's okay to hear a no, to Gib's point, right? Tell me why. And there's a lot of people out there that just kind of get shut down, emotionally shut down at the no. But hey, no problem. I totally understand your situation or your decision. Help me understand what's going on with your situation, right?
Yeah.
And that's an opportunity for you to be empathetic and listen to what they have going on. But maybe these people need help, right? Maybe they did lose their job, and you can hook somebody up or something along those lines. I'm a big fan of asking questions like, help me understand why.
Sure.
And maybe there's something that they didn't understand about the deal. Maybe one of their friends just got a capital call and they have a sour taste in their mouth. But unless you know why, you don't really know what the objection is, and if you can overcome it, or if you just kind of park it and wait till the next one.
Couldn't agree more. Couldn't agree more. Well, Gib, as we start to wrap things up, we want to be respectful of your time. Where can people find you? Where can they find out more about Gib Equity or Irons Equity? I totally butchered that. And the projects that you have upcoming and everything that you're working on.
Yeah. So, Brian, they can find me on the internet. I've got a website. It's ironsequity.com. Go to ironsequity.com, submit a form, and schedule a call with me. They will have access to my calendar on the website, and I'd be happy to do an introductory call with anybody that has any questions. I just love to meet people and make connections and talk about real estate. I really do enjoy it, and ironsequity.com.
Love that. Gib, thank you so much for the time, Mr. Buchalski.
We're going fishing. I'm just
fishing.
saying, Gib's got a great story. I want to hear more about it, and I can't wait to see these deals develop. We're gonna go catch ourselves a giant tuna, boys.
Let's do it.
We gotta get you the patch though.
Yeah, I'll take a couple patches this time.
Okay,
Make sure.
one on each ear.
Yeah,
All
make
right.
sure that I'm good to go.
Love it, Gib. You're a gentleman and a scholar and a fisherman, so
Yes.
I'm pretty much the perfect man. Contrary to what we think about Nick. So, Gib, thanks so much, my friend. We'll talk again soon. Thanks everybody for tuning in. Go check us out at deepbluere.com. We got some exciting stuff literally in the hopper as we speak, and we'll see you next time.